Welcome back to Squawk. In our What's Working segment today, we want to dive into whether we are seeing the institutionalization of the meme phenomenon and just how much of this flurry of active trading is spilling over into passive investing. Joining us right now to talk about that is Stephanie Link, Chief Investment Strategist and Portfolio Manager at Hightower Advisors. She's, of course, also a CNBC contributor. Sarat Sethi, Managing Partner and Portfolio Manager at DCLA. He, too, is a CNBC contributor. Stephanie, I'd like you to try to link up, if you will, and excuse the pun, somewhat intended, somewhat not, what we're seeing here in terms of the way institutions should be thinking, are thinking about this meme stock phenomenon and how it's starting to, I don't want to say infect, but impact the passive world?
Well, it's a good question, Andrew, and good morning. First and foremost, if your benchmark is not the Russell 2000, you don't even have to pay attention to these names, right? Because my benchmark is the S&P 500, and there's not one of these names in these, not one of these companies in that benchmark. So here's the thing, though, right? I mean, like, there's a certain investor class that are involved in these names. They're retail, they're Reddit, could be hedge funds, but they're nimble. They can get in and out. They can day trade, right? They can embrace all of this volatility and this risk. Institutions that have billions of dollars, they can't get in and out of these names. And these really, truly are day trading kinds of names. So to me, I just think this is a subset in the market. It's a very small group. Some of us don't even have to pay attention to it, especially if there's no contagion in terms of when they're up, you know, does that affect the market? When they're down, does that affect the other parts of the market? They don't. So I just feel like it's kind of like you've got a lot of liquidity sloshing around. You got low interest rates. If you believe there's no inflation, that's a recipe for risk assets. And these are risk on within risk assets.
Sarat, this may sound like a philosophical question, but it could turn out to be a practical question. And you may think this is Looney Tunes to say. Is it possible that the meme stock investors could ever push the value of these stocks and the business, because you need to have a little bit of underlying business, into some of the other indexes over time?
I think, Andrew, you're on something that we need to watch for, and we need to be very careful. A lot of these stocks, as their market caps go from small cap, mid cap, and all of a sudden to large cap, it will be up to the large cap indexes, like Stephanie said. Will the S&P say, hey, this meme stock now has its own fundamentals to get into the S&P? But we have to watch that, but not only watch that, but as, I guess, more Reddit investors move into maybe bigger market cap stocks, folks like us who benchmark against the S&P need to watch and say, are these companies that we're investing in, are they going to be in our index? But I think for the time being, it's not something that the S&P needs to watch. It's really ETFs. It's the Russell 2000, as Stephanie said, and it's really some of the other indexes that other people benchmark. And I think This is where closet indexers, those who actually mimic indexes, they have to be really nimble. All this adds to the volume, and I think the question is going to be when liquidity starts being withdrawn, who's going to be left and who's going to be, who's going to be holding some of these stocks that some of these valuations don't make any sense.
Steph, I know there's a view that a lot of these valuations don't make any sense, but when you think about some of the larger cap companies in your universe, do you think that they could ever become meme stocks? I mean, Sarat just sort of made this mention that you have to be sort of nimble and start to think about what could happen to other stocks. Or are these stocks that are on our screen right now, AMC, GameStop, Clover Health, Wendy's now, we don't have Bed Bath & Beyond up there, but maybe we could or should on any given day. Are those stocks, is there something about those stocks, both the short interest, the size, at least initially, that makes them more attractive? And can it be done at a larger scale company?
I don't think that the Reddit traders are looking for quality or fundamentals or valuation. They are looking for high short interest names. And the companies that I traffic in the S&P 500, they're really, I mean, some of them have a little bit high short interest, but nothing like 20 or 30 or 40% to start. So I think it would be kind of hard for the Reddit traders and retail investors who are playing this kind of, and I say playing, I mean that, they're playing this kind of game. I think it's hard to try to find those in like the larger cap companies, quite frankly.
Shepard Smith here. Thanks for watching CNBC on YouTube.